Hi, welcome to the Market Alert for Tuesday the 14th of February 2017. So yesterday the market continues its assault to the upside, also known technically as a melt-up. More on that in just a moment. So we've seen the market moving up. Started out with some decent volume and then it just petered off. The market trading sideways and then eventually trading up to the 20,400 level, making a new all-time high at 4:30. The market then moving lower but failing to hit the scalp. You can see the market going through the 20 bar average and then it comes back and then stays above it, and then eventually we break through with a loss on this trade, and then eventually the market runs out of steam. A bit of a peak in the volume here as the market stops, and put it in the right place. You see the market put in a sell signal there and move all the way down to the 20,400 level before finding support again. So way to just recoup the loss, but a very, very strange thing at the moment in the markets. You can see we've got the market moving higher for the last 3 days, and in fact if we to measure this, you can just see how many points the market's put on in the last few days as well. 415 points, all on low volume, as you can see there. And speaking of low volume, have a look on Zero Hedge. You can see that McLennan warns of important price top as volume collapses. So it's not just me that's been going on about this. We've certainly had, if we look at the end of day chart, you can see there in the weekly chart, we've had the pros leaving the market. We saw that take place over 2 months. But Friday, you can see how the volume is a lot lower as the market moved higher, and there's a drop off in the volume now as prices are moving higher. This is consistent again with a melt up. This is engineered and designed to bring in the weak investors, the weak traders who think the market's going to just continue to go up and up and up and up, because it has done. If we look at the monthly chart since 2009, and that's all it's done, but it's all been funded by central bank money. And at some point that has to come to an end, although according to another article by David Stockman, which is well worth the read, and I've included a link in today's email, what's going on today is complete insanity. And he talks about the US government running out of money on the 15th of March, so that's a month today. Definitely a good interview, well worth a watch, so take a look at this as well. Also today we've got Yellen is going to be speaking at 3 p.m, so you don't want to be in the market, and that comes out, as I say, 3 p.m, which is also going to be very interesting, because according to Zero Hedge again, and it's not real news because I mentioned it before in the Market Alert, brace yourself for the looming collision between Trump and Yellen. Yes, these two polar opposites. She's incredibly cautious about fiscal policy, whereas Trump is seen as some sort of drunken poker player who is happy to take risks. And again, it's certainly one of these other pieces in the jigsaw that Trump is going to be anyone with egg on his face. They're going to make sure that he's got a situation where he ends up being the fall guy. The only thing is he's removed the legislation, or repealed the Dodd-Frank legislation, which allows the bankers then to leverage up even more. So he may have placated them for a time, but at the end of the day, once they've used everything in their powers to keep this market in the highs, it will actually fall. And then finally we've got implied volatility 911. This is interesting as well, because on the 27th of January we had 8.15 when we had the first move up in the market, and the top was in place, and then we got a bit of a pullback which failed to break the 76% to the downside and then moved back up. Here we're seeing the market making all-time highs 3 days in a row, and yet the implied volatility isn't reflecting this. We should be lower than the 815, and we're not. So I think they're starting to get a bit shall we say concerned and nervous about what is actually coming down the line. So again, interesting times that we're seeing here at the moment. And that's about it for today. So be warned, Yellen speaking at 3 p.m, no doubt going to boost the market. and then we'll take a view thereafter. So that's it so far for today. As ever, thanks for your support and also for watching. See you in the next.